Hey guys, welcome back. Hope you had a great week. So last week we still continued to move higher on CPI, and even though the Fed wasn't great, it didn't really make much of a difference to the market. We remained sideways. And so now we pretty much are in the fifth wave, in a wave three. So, most people are probably waiting to short the market. And who wouldn't when it's so overvalued? But I just want you to note and understand these wave fives, it could end here tomorrow. It could go on for another month.
This short clip is presented by Chase. Fast track your learning curve and profit with our Leduc Trading Slack community. It is ideal for beginners who love the chase. Chase provides access to not only Samantha's daily market thoughts and chase trades, but also her fabulous team of live stage mentors who share their actual trades and risk management stops across equities, options, and futures. You also get access to custom trade support when you need it. For more information, visit www.leductrading.com/chase.
Before it comes down, it's like there's the most dangerous kind of wave to start shorting on would be a wave five and a wave three. These generally are the longest wave in a wave three. They can be if they want to, and they're the most treacherous. The reason I say they're treacherous is because sometimes they could just break the previous high and come down. So they don't, it's really hard for me to tell you when to start shorting. As I've been saying for the past few months, the trend is up. We'll just continue to buy dips till we can see a change in behavior. I would, however, urge caution, right? If you are trading this market, you should size it accordingly. No one's going to go balls deep in the market at this stage. Everyone thinks like the momentum is kind of in a few key stocks, which is true. Tech and mostly FANG and semis and AI are the ones carrying the market. Like most of the stocks are down. But again, that's because of the way the structures have been playing out. So that's the reason tech generally June, July usually is when tech is carrying the momentum. So I'm not really surprised by this action. I am still, however, any pullback, it would need to see a significant breakdown. I'm not oblivious to the fact that we are diverging under the surface. The breadth is horrible under the surface. I'm not privy to all of this, but this is so far how it looks. We go to the chart of QQQ. However, unlike SPY, QQQ, you can see here, let this chart load, and you can see we're nowhere close to the top of this channel yet. So when we do go close to the top of this channel, we're not that far off, but we've still got a little bit to go. So when we do come closer to that, I start looking for shorts. I still think we're early, but again, I am not oblivious to the fact that we're super overbought. So I am definitely looking for any sign of a reversal, any spike in volatility, any yield spike, any, unusual dollar movement. I'm honestly just looking for clues, but again, there's a reason I keep saying I don't think it's safe to short yet. It just, given the seasonality and everything, I don't think we're there yet. So yeah, that's all I have to say regarding the market. The dollar, however, alternatively, you can see that the dollar rate, we did bounce off this channel, but again, we are still rejecting that 0.382 fibs. I'll put it this way. If the dollar starts to break below 105.5 and starts to come down, then we're very likely going to push down into 103. Can you see the red path? But if the dollar just goes sideways and holds over 105, like it stays between 105.5 and 105 and consolidates, then we're very likely going to push higher along. If the dollar does that, if the dollar consolidates and pushes into that leg, that means in that case, I could definitely see this fifth wave ending here, and then we come down for that wave four. But otherwise, the dollar looks more like it's going to reject. So I still think we will continue chopping and slowly grinding before it's done. I still think a bunch of other stocks, some sectors need to catch up. We need to have a blow off rally before we can have a short. So it's kind of the thing. And Wix, majorly, Wix is one player. You can see here, we came down, but we pretty much just bounced off of support. Like you can see here that we didn't even close near the highs. We pretty much closed 75% down on that candle. So, we've discussed this in the past. We know that that it has an unfilled gap to like 10.7. So I'm not looking for a short. The wicks at least comes down to 11, 10.6. We're just kind of chopping on the wicks right now. So again, not really a great indicator. So yeah, with that being said, let's look at this week's watch list. And the first stock I have is Netflix. The reason for that is you can see here, we've pretty much been in a strong trend on Netflix. Yeah, I was looking for that channel. I was just like, where did my channel disappear? But yeah, anyway, you can see here we have been on a strong trend in Netflix. You can see here Friday we pretty much broke out of this consolidation at 653 and we had a move. So I do think that we could continue moving higher on Netflix. Like we are consolidating. So if we can push over 670, we did break out of this 660, 650 area. So as long as we stay over that, consolidate, Netflix should continue moving up to 675, 685, 690. So something like this is what I see for Netflix before it tops. That's why I have Netflix on this week's watch list. This one I have is Airbnb, and I've mentioned this in the past. I do see this as a wave four. You can see we did have the massive sell, but we have bounced off of support. So for follow through, I would like Airbnb to break below 144.5. If it can break that, then you can see here pretty much. If I zoom out, you can see here we've broken down from a major channel. But I have seen this once it breaks down, try to go back to the top to come down. So that's the reason. Wait for it to break 144.5, 144. If it breaks that, then it's very likely going to come down into the next level of support. So yeah, I am watching Airbnb to see if it breaks down. Next thing I have is Tesla. Unlike Airbnb, I do think that as long as we stay over 175, this could be your 1, 2, 3, 4, 5 on Tesla. This is what I'm looking for on Tesla. We break this 175, then this would be my 1, 2, 3, 4, 5, and we will break this and make a new low. So I will be watching. That's kind of why those levels are important and why this range on Tesla, once it breaks, will be important. So yeah, I am leaning more bullish than I am bearish, but I'm not oblivious to the other side. I want to emphasize that many, many times. Because some of you, like you asked me the same question after I've kind of repeated that. So I don't know if I'm not being clear. So it's kind of why I'm repeating it again and again, that though I may be bullish, I am not saying that we cannot be bearish. So that's it. And JD, you can see here, 29.3-ish was the level we broke down for. So as long as we stay below that level, we're very likely going to come down to 27.2 and 25 in time. You look at BABA, you can see how far elongated it is. So we can see Baidu, it's made a new low already. So these are laggards. So any bounce there would be good shorts. So keep an eye on those. All right, guys, that's all I have for this week. I hope you have a great day.
Subscribe to Leduc Trading YouTube channel for more Wolf's weekly wave list videos and other content.